So we're excited about today. We're going to talk about disaster recovery. I also want to say good morning to our Zoom members. You want to unmute and say good morning? Are you all out there? Hard maybe. Zoom members. Good morning.
Good morning.
Yes.
Good morning.
Thank you also all for coming back. Continue to ask questions or give us updates in the chat. It is being monitored. Also, we're going to try and engage some of these Zoom team members today as well, so please feel free to volunteer as needed. As everyone can see in the room and online, our panel has expanded. So before we truly get started, I want to give Nicole and I would like to give Trevor opportunities to introduce themselves. Nicole, would you like to go first?
You bet. Good morning. My name is Nicole Patrick. I'm with the Washington State Department of Commerce. That is the home of the CDBG disaster recovery funding.
Thank you, Nicole. And just to give context, have we had any recent allocations in the state of Washington?
We had one in 2021 for the Whatcom County area river and flooding event. That was our first DR award in over 2 decades.
Yeah, pretty significant. So we're going to get into that and explain that a little bit. I know yesterday we heard from Ed and some of the blend funding approach he took for his recovery, and so I think that'll be really impactful to have Nicole here how the state of Washington has approached their DR allocation to date and what they're looking forward for anything potentially in the future, as well as any lessons learned. Right, that's the one thing that I think we all have here is we've been able to build on our experience and be able to share that as much with you all today and yesterday. And so Trevor, FEMA, we said FEMA a lot yesterday, didn't we? So now he's here.
Trevor Jordan, I'm the Director of the Recovery Division here at FEMA Region 10. So it covers Washington, Oregon, Idaho, and Alaska. I think that's a pretty common regional setup among the federal government. The Recovery Division manages the public assistance, individual assistance, and interagency recovery coordination functions for Stafford Act declarations. And we also do preliminary damage assessments and declaration request processing.
Thank you. They'll handle it.
Okay.
So thank you, Trevor. So yesterday we did high-level talk about IA and PA. We talked a little bit about damage assessments. We did not talk as much about interagency coordination. We did talk about agencies and that there is coordination, but I'm interested in time to hear a little bit more from you about that. I think it'll be really helpful. So we're actually going to start this morning just talking about disaster recovery when it comes to our case study, Ed. And so for our new panelists and anyone that was not here yesterday, Ed is with Butte County, Northern California. He experienced the Paradise wildfires. Sorry, I've been talking about a lot of wildfires. Just want to make sure I named the right one. And the significant impact that it had on his housing authority, both from the planning perspective, the response perspective, and now we're really getting into that recovery. So we talked yesterday, we kind of ended the day with the days after. But Ed, it's been a while since the event, and you're still recovering. I mean, and we talked about that the average recovery takes 20 years from the date of declaration or the date of the incident. So how's it going now? What's the long-term recovery looking like for you?
Okay, so let me just start by reframing where we're at. I work at a housing authority that before the disaster had about 3,000 units, 2,000 Section 8 and 1,000 other owned housing, 345 public housing units. We have been in operation since 1946. We serve a very rural Northern California population of extremely low income seniors and disabled. 2/3 of our clients are senior or disabled. We had in November of 2018, we had the Camp Fire disaster, and one day 14,000 houses burned down in the town of Paradise. And there was, secondary and tertiary effects that affected all of Northern California, mostly relating to lack of housing opportunity. So our challenge was, what do we do with the people that were displaced? There were 35,000 people displaced in that disaster. We had 318 voucher clients who lost their homes in the disaster, and that was actually our first priority for recovery because we lost 15% of our Section 8 administrative revenues overnight, which actually jeopardized the housing authority's viability. So our first effort, and in partnership with HUD sent us technical assistance to help us find housing opportunity across the West. And we were trying to relocate families, and as I said yesterday, the lesson learned was that Our families are local. They don't like moving halfway across the country. They would like to stay where they're familiar and in their own communities with their own support networks. We had an opportunity that was presented by a congressman from Sonoma following the disaster. There was a special allocation of low-income housing tax credits, 9% credits that were made available by Congress, led by the congressman from Sonoma. As I said yesterday, there were 18 counties in California that were affected by disasters in 2018. And the special allocation of credits was supposed to help with disaster recovery. So we actually had Congress out in the lead, our local congressman, by way of delivering the first batch of money we could use for development of housing opportunity. We received 2 rounds of those special 9% credits in 2019 and 2020. And with those credits, we in Butte County were able to tee up we have 50 pipeline projects altogether in Butte County now, but the Housing Authority teed up 19 projects using those tax credits. We believe we captured about 60% of those allocations of credits for our development coffers. But really, the credits was just one piece of the financing. We had to backfill those tax credit awards with other financing. And so we typically leaned on state California housing finance programs. There's a multifamily housing program the state operates. There's some permanent supportive housing programs. We backfilled these federal tax credit commitments with local state funding commitments to complete that first round of projects. Now, the second round of projects that came online was CDBG-DR funded and based. CDBG-DR didn't really appear in our arena until about 3 years after the disaster. And so it took us a while. We teed up a whole nother set of projects with the CDBG-DR commitments and have proceeded to backfill those commitments with regular competitions at the state for conventional tax credits. So the point is we've taken the special CDBG-DR or the CDBG-DR flows and the tax credit special allocations of credits, and we've been able to parlay those into 2,959 housing units delivered to our jurisdiction. We have about $1.3 billion in investment from tax credit investors and lenders in producing this 3,000 units of housing. The Housing Authority has, 1,100 of those units that we are in partnership with. So there's an enormous volume of activity in delivering units. Our first units were delivered. First projects were delivered about a year ago. We're about 50% delivered on the 3,000 units to date. We have another 50% to go. About 2/3 of that 50% are in the pipeline under construction. We have 7 projects that are stuck, though. They all have received local jurisdictional commitments of CDBG-DR funds, and they have all made repeat applications to the state for low-income housing tax credits to complete their financing packages. All of those 7 projects have applied to the state 3 times and been refused 3 times. They all have perfect scores. The tiebreakers, they don't make it through. The state of California has not in any way, shape, or form prioritized disaster recovery in administration of its programs. So we get local commitments of DR commitments from our local jurisdictions who know what they're doing. We go to the state and there's no prioritization for funding of those projects. Every time those applications are submitted, it costs between $75,000 and $150,000 to submit. So we have some developers we're in partnership with who've spent over $500,000 trying to get projects funded without success. So one of the lessons learned is while we greatly appreciate our congressional response, which was extraordinary, delivering those special allocations of tax credits, we really appreciate the feds for the CDBG-DR program. Those monies were really significant in teeing up development opportunity. But we really take umbrage with the state of California for not prioritizing disaster recovery in any way. And in fact, they've taken the CDBG-DR program. It's interesting. This disaster covers 2 administrations. And so under our first administration, CDBG-DR monies were delivered directly to the local jurisdictions. They knew what to do with them. They'd already run CDBG programs, no problem. But with the Trump administration came in, the new administration policy changed, and CDBG-DR monies were then directed to the state. that became a nightmare as the state took the CDBG-DR program and the CDBG-DR agreement and overlaid their own state standard form of agreement, basically pirating the entire program, making it so difficult to work through their administrative requirements that it has us disaster responders just shaking our heads. The state is actually an obstacle to our disaster recovery, and particularly in regards to their work in dispensing CDBG-DR funds. So we had this enormous opportunity to create housing opportunity. What has it done for us? Well, it saved our Section 8 program. We have Section 8 vouchers. As you know, we can commit up to 20% of our voucher capacity towards project basing of vouchers, 30% if you include special needs populations. So our housing authority has committed 581 vouchers to 19 projects by way of disaster recovery. We were not an agency very interested in project basing of vouchers at all, but now we find ourselves, through necessity, being a pioneer in the merging of these two programs. And I'll finish my remarks by talking about the collision of the Section 8 voucher program and the Section 42 low-income tax credit program. It seems to be the vehicle that is going to move most of us forward with the most horsepower, given the tools on the horizon today. Mixing project-based vouchers and tax credits makes a lot of sense. There is one fly in the ointment, though, and it has to do with utility allowances. Money is being thrown away because when you project-based Section 8 vouchers in a tax credit subsidized property, you are compelled to use for those project-based vouchers the housing authority's area-wide utility allowances. You may not use project-specific utility allowances. In the tax credit program, you can use utility allowances which are project-specific, which are much more efficient. When you're building brand new buildings under California's energy code, these buildings have virtually no utility expense. But when we're asked to apply a HUD area-wide utility allowance on that equation, there's a lot of money lost in the underwriting. We have a 30-unit project in Gridley. We just finished a senior project, and we just figured out that based on this discrepancy between area-wide utility allowances and project-based utility allowances, we lost $350,000 on the initial transaction. And it was just capital gone to waste. So we're working with HUD and we're working with Congress to try to resolve that glitch, because we know going forward there's going to be a lot of work marrying these two programs, because there's in the creation of housing opportunity. Where did it hit the bottom line for our agency? Before the disaster, we would hand out 100 vouchers. 12 of those voucher holders would actually lease up. After the disaster, we would hand out 100 vouchers. Only 6 voucher holders would lease up. It was virtually a counterfeit program. They were worthless vouchers. There's no place to use them for lack of housing opportunity. With these projects coming online, we've attained full utilization. Our Section 8 program is now operating at 100%. In fact, we think we're going to go into shortfall a bit this year, but given disaster recovery, we're happy to dive into that arena. So it's been so it's really helped our voucher holders. We're now seeing a success rate of almost 50%, because our voucher holders go out and they find housing in these projects we've just built with project-based vouchers. So it's been a great solution for disaster recovery, bringing these two programs together, but it hasn't been done a lot, and we're all here to work out the kinks.
Thank you, Ed. So one of the things that I'm hearing, and I've experienced it, and it's something to be very mindful of, is the spirit and the intent of these programs is genuine, and it's good. It's thinking through the ramifications when you're talking about blend funding or multiple opportunities, and you're taking multiple funding streams or approaches, and ensuring that the compliance across these different programs can marry up. I actually want to kick it over a little bit to Trevor, because interagency coordination, that's what a lot of this is. We talked a little bit yesterday about when it comes to after even immediate response, having HUD involved, having FEMA involved, ensuring we're not duplicating benefits, but also everyone's there to support. So do you want to talk a little bit about what that looks like for FEMA?
Yeah, and I'll preface all this by saying that, interagency recovery coordination is
is mandated under our Stafford Act, right? Section, I think it's 402C or something, says something very vague about FEMA will coordinate the long-term recovery from a disaster, but it doesn't really specify anything further, and there's no implementing regulations. So FEMA is kind of just trying to muddle its way through what that really means and how to execute on it. Generally, the approach that we've taken has been a little haphazard. We are maturing that capability. So I just recently hired a branch chief for interagency recovery coordination at the Region 10 office in my division. There's a new director at headquarters for interagency recovery coordination, ICD. And what we're really focused on is kind of two things. One is connecting impacted jurisdictions and impacted people with resources that might be able to help them out that are outside of the agency. So anyone that's sat down and read the catalog of domestic federal assistance knows that's a pretty big document. It's got a lot of stuff in it. No one can, I don't think anyone can be super intimately familiar with all of those programs, but at a high level, we want to make sure that we're surfacing opportunities from other federal funding agencies to solve problems that communities have after a disaster. And the second thing is we want to be able to track that progress, tell the story, and make sure that we continue to be a good liaison between communities and those funding agencies. So, the scheme really is to try and build some capability too at our federal partners, our recovery support function lead agencies. Generally speaking, that's a collateral duty for a lot of agencies to come out and help FEMA with interagency coordination after a disaster. We're trying to encourage our partners across the federal government to increase capacity there as we see more and more disasters which have larger and larger impacts more frequently. So that's really kind of the approach we take, and it is really right. Part of the process is doing a needs assessment for impacted jurisdictions, figuring out where the shortfalls are between what the Stafford Act can help with and what the requirements are, and then making sure that there's good linkages between the federal, state partners, and local partners at all levels. So that's how we're building out that capacity to do interagency recovery coordination.
Thank you. And right after a disaster, what does that look like for FEMA coming in? Recovery really starts on day one of response, but what does that look like, or what would it even look like in California or other areas? So
we are, there's new doctrine on that, right? And it says, on the first day you should have, a federal disaster recovery officer and federal disaster recovery staffers from FEMA who should be cooking up an initial assessment. And right, what I'm always cognizant of is where we work through generally partnerships with the state's emergency management office or tribal government emergency management office, which is typically pretty small. I know California has Cal OES, which is a real behemoth, but out when I go to Idaho, it's a handful of people working in recovery at the state level. And right, the pipe is only so big, and FEMA can only push so much through it at one time. We really try and be deliberate in our practice of saying, hey, right, what do we need to do first? Here's the response phase. As we sort of devote fewer resources to immediate response, how do we sort of step up the recovery piece, the implementation of Stafford Act programs, and then, as we identify the gaps that the Stafford Act programs leave, how are we making good connections with other federal agencies or private nonprofits or philanthropies?
Thank you.
So one of the things that we found was interesting is when FEMA arrived in town, we thought that this is a housing-related disaster, 14,000 units. So we thought housing might be a focus, but really there's a lot of players who are asking for FEMA's attention during a disaster, and it's usually the mayors, the city staff, the shakers and movers. And we housing authorities, the world does not revolve around us. So it was surprising in our particular disaster that it really wasn't housing-centric. FEMA has its MO, and all the jurisdictions we're talking about infrastructure loss, all the communications, the roads, and the reestablishing. How do you maintain continuity in your community when you have no tax revenues? And so there's all these other issues that arise that are demanding, calling for attention. So housing kind of falls off as a secondary concern. Not for us, but our experience in the disaster recovery was FEMA was really focused on the bigger picture, on the community as a whole. They had their housing-specific programs, but it was not the fairy godmother walking in with a magic wand making everything good.
Isn't that
No,
true?
and having sort of overseen some implementation of FEMA's housing, and right, I think there's a couple things that FEMA does relatively well on the individual assistance side. Right, we're good at dispersing cash, we're good at dispersing rental assistance, we're good at making payments to survivors to repair or rehabilitate their homes. Right, FEMA, that's the sort of bread and butter of the individuals and households program. Which is the major component of FEMA's IA program. What we're significantly less good at, and what we've always found to be a lot more challenging, is implementing what we call the direct housing program. That's a temporary housing program that FEMA, that's like FEMA trailers. When you hear about FEMA trailers or mobile housing units or temporary
Right.
housing units. That's the direct housing program, and that program is challenging for a wide variety of reasons. Right.
Last ditch effort, not the first.
Yeah,
solution.
we're sort of, I won't say, right, we try and be pretty deliberate about switching that program on. It generally, and I will say that out in the West, right, the perils that we face here and the disaster landscape are significantly different from the perils that FEMA was sort of originally built around in the Southeast. So FEMA does a lot of work every year with flooding and hurricanes and inundation and things like that. It's only relatively recently that we've seen the types of fires that we have with this frequency that burn across the wildland-urban interface into urban areas and destroy hundreds or thousands of units of housing stock, which is a significantly different challenge for affected jurisdictions because after a flood, right, you can muck out, you can repair 4 feet of drywall, you can repair some electrical components or mechanical components, and you can get a survivor family back into their dwelling within a reasonable period of time. And FEMA's job there, right, is to bridge the gap. When you have a fire like we've seen in Paradise or in Marshall or in Southern Oregon in 2020 and a variety of other places out in Spokane, the housing stock is permanently impaired, right? And
Right.
so we don't have a good bridge for survivors who are displaced over the long haul. And one of the bridges we have is temporary direct housing, but that program runs for 18, 24 months. It's super slow to get started. Local jurisdictions are sometimes really hesitant to permit the types of group sites or activities that we need to implement that program well. It's, from a taxpayer's perspective, it's colossally expensive for what that survivor family actually gets from it. And so I think, that's a real challenge. That's, when people ask, there's a few things, when people ask me what keeps me up at night when I think about disaster recovery here in Region 10 and the fact that our perils permanently impair available housing stock is one of them, and the fact that we don't have a lot of great ways to close that gap before new housing stock comes online is a difficult challenge.
And so I actually want to pause here because I heard a lot from Ed about his expectations after that response and recovery and thinking FEMA's going to come in and that this is a housing mission. And I really would love to hear from Joel and Trevor when it comes to the community lifelines and kind of that prioritization, because I think it would be very helpful for everyone to be thinking about this if there were to be an event. Not that housing is not important, but what does that look like from a prioritization from that response into recovery when it comes to those reestablishing those community lifelines?
So I'll take a first swag at this. So as everybody here, I guess, do you guys understand all the different community lifelines? That's the first question. No, which is good. So it's a tracking tool we have, and I'm trying to remember off the top of my head. So we look at all the functional areas within a community, and that's electricity, water, transportation. So you kind of look at your main functions that support a community. Health is part of that, fire suppression, police. So there's the different lifelines. So for us, is when we look on the response side, that's what kind of we're tracking at the state level, is what are the lifelines for a given disaster? What's at risk? What needs resources? What is stable but needs to be sustained? So we look at that, and for us, housing's not really direct on there, but all those services support getting people back to their homes or getting people into a home. And we talk about the critical infrastructure, specifically your water, your sewer, your power, getting those homes function, those assets functional, and then transportation. Are they able to get in and out of those locations? Can we bring people back in? Can we bring a lot of people back in, or just a couple? You know what I mean? How do we bring people back in and out of, and then do they have the security there with the police? So that's kind of how the lifelines roll out. And Trevor, anything else to add?
Yeah, I'll say from the FEMA standpoint, Joel's breakdown of kind of how, I can't remember all the lifelines because that's really the response game, and I'm in the recovery business. But right, we look at sort of what the enabling functions of a jurisdiction are and how well those are functioning, and that does have some impact or some bearing on whether or not we can return people to their community. One of those lifelines, I believe, is mass care and feeding, and that is like part of the individual assistance program is coordinating mass care. We rely pretty heavily on our partners in voluntary agencies active in disasters and the American Red Cross to actually execute that function. Occasionally FEMA will, if the disaster is of a sufficient severity and magnitude, produce our own sort of camps or areas to do mass care and shelter. But what I'll say is that FEMA, for most of my time at FEMA, 8+ years, has never regarded itself as a long-term recovery organization, right? We are a response organization, and then we're a long-term recovery organization with respect to kind of a lot of facilities, publicly owned infrastructure. The public assistance program is a relatively long-term program, but the goal of the individual assistance program has always been to provide a temporary relief for displaced survivors while they work towards finding a more permanent solution, either through their own efforts, through their state or local programs, or through the efforts of voluntary agencies. I noticed a gentleman in the back.
Yeah, it's just a question. I pulled him up as we were talking because I couldn't remember all three either. So food, hydration, and shelter is the one you're talking about. And sheltering, for the most part, is temporary Red Cross, temporary fill in the blank NGO. It can be tents. It can be sort of temporary housing. But as you said, it's not long. I guess my question is, what, if anything, is being done on the federal government to address the gap? That may be FEMA, that may be others, but clearly there's a gap here. And I know we've talked a lot about fires, given your experience, but for me, Seattle, earthquakes, you're talking a couple thousand residents, there's 600,000 just in Seattle. So what, if anything, is being done to deal with it?
So just for the people on Zoom, just so that they can hear, really what we're asking about from the audience is that gap when it comes to mass care and that sheltering need, and what's being done about it on the federal level, especially while we have wildfires. We also have other vulnerabilities like perils like earthquakes, and what would that look like for, say, Seattle, that's a little bit more concentrated?
So I know I talked about this yesterday. So we're really talking about that transitional housing space. I mean, is that what you're getting to? Yeah. So as we mentioned, FEMA is doing some work. We're looking at pre-disaster housing, and Washington State with Louisiana, New Jersey, and Montana were part of that pre-disaster housing initiative last year, and they're trying to redo it this year with additional states coming up. And the whole point of that is to look, and the primary focus, as we learned in that working group, was that gap of the transitional housing, how do you get after it? And nobody really has an answer. And I'm going to be honest with you, but we have like we talked about yesterday, we have the problem and we're working through it. So like New York City, we did a site visit out there, and they're even tighter packed than Seattle, and we looked at Sandy and some of the stuff they did, and trying to look at those modular houses. What does that look like, and how do you add them to infrastructure that can be scalable after brought down? And it's a tough nut to crack, and its costs are extremely high. The unit we were looking at, hey, who's got the best price for like transitional housing units? New York's was in at about 1.2 million, which works for their cost per square foot for New York City, but does not necessarily work for our jurisdictions. So we're looking at different options. But that's kind of that problem set is that transitional housing, and I know you've dealt with it a lot, is how do we find the right gap, and specifically trying to keep people in the communities where we can, because I mean people will relocate and then hopefully come back, but we don't want to just like lose a whole community. So we have that problem in Washington State with Malden, where whole town burned up. We had a lot of residents, we had a handful of residents stay, but a lot did leave. And some are starting to come back now as they're recovering. I know you probably had a bit with any of your people coming back? Okay, so they're finally coming back. But that is the nut that we're all trying to crack, and I don't know of a right answer right now. But if you got great ideas, I am more than willing to push them forward.
So kicking over to Ed and then Fred.
Okay, so people would ask me right after the disaster, what do you need? And my first response was soap bubble housing. I need housing people. We need to be able to house people overnight. What do you do with large numbers of displaced people? Wildfire, floods, earthquakes, whatever. Imagine several thousand or tens of thousands of people in your community without shelter. What do you do? There's actually precedent in this country for what to do. There's an example in Butte County in California. In the Great Depression, great numbers of people were displaced from the Midwest. They went to California to seek salvation. They arrived in California's Central Valley as welcome as the homeless people are welcome on our streets today. They were reviled by the locals. The federal government ultimately had to step in. They set up 4 refugee camps in the Central Valley, and then ultimately set up 32 camps, this is in the 1930s, to house these refugees from Oklahoma in the Midwest. Those camps were there for probably 30 years to unwind for the displaced populations. But the fact that there was property set aside, and it started out as tent camps. These were tent camp, kind of like the camps you see Palestinian refugees or whatever, set up like that. Ultimately, they transformed into tents on slabs, and then they had wall tents, and then they had Quonset huts and trailers, and then finally we had permanent housing there, evolution through the many decades. But it started out as a refugee camp. We've done this before. But the resistance to doing it again in the face of a disaster, in the face of thousands of people sitting there on the street, it was mind-boggling to see the gap playing out in front of us, the need obvious. Bless FEMA. They came in, they brought trailers. But the trailer program really isn't designed for this kind of disaster. It's designed for another kind of disaster. And so FEMA's, they're a creature of scar tissue, and we love what they do, but they're not designed for this kind of disaster. So there's this gap, well said. And the real problem that we need to face going forward is, in a disaster, what are you going to do with those people? That's your first question. And you can start preparing for that now.
Yeah. I prepared, Trevor. Look, FEMA, they want to get in, provide some help, and get out. Trevor, being in the Recovery Directorate, has a really tough challenge because recovery, as Brittany started off saying, can go for 20 years. There is nobody in FEMA anywhere in leadership that wants FEMA at anywhere close to a disaster for 20 years. They don't want them there for 2 years if they can avoid it. It's like, wrap this up, we got other stuff to deal with, let's move on, right? And that's just not the time frame that major disasters and catastrophes recover in, right? One problem. Another is, as Trevor said, FEMA's response in housing has been largely dictated by where the greatest needs have come up, and that's in the Southeast with storms. And so FEMA looks in its toolbox and it sees a hammer and it treats almost every problem as a nail, right? And so it tries to put what works in the Southeast in the Northwest. Not good. Congress recognized that this was a failure in approach. And so in 2018, the Disaster Recovery and Reform Act was passed. What Joel has been doing with other folks, Pat Forbes and others in Louisiana, is something that the Disaster Recovery Reform Act anticipated. And it said, hey, look, states, if you can do an analysis in advance to show that there is a different and cost-effective option for housing that is different from the hammer solution that FEMA tries to bring. And now they've got two hammer solutions. One is rapid rehousing, the other one is the bringing in the FEMA trailers. There are people within FEMA and HUD for years studied modular housing as an alternate solution. There are studies written saying that this is a better option in many places. I have, for the longest time as a policy matter, been trying to push it. And I want to tell you all that you all have the ability to work with your states now to do the analysis of alternate temporary housing solutions like modular housing. It's not much, and so it would be something akin to the size of a trailer, but there are ways to take that temporary housing solution that FEMA wants to pick up and throw away 18 months later, or move to someplace, sell it to someplace else, to somebody else that's going to use it for man camp somewhere, and use that as the start of your new housing solution. It will not work in every community where there's a fire or an earthquake, right? But places where they're modest homes, you know, say 1,200 to 1,500 square feet, if you start off with a 600 to 800 foot module and can add on using disaster CDBG, using a home mortgage loan that you might be able to work through your housing finance agency to create, then you have a temporary housing solution that lends itself to a permanent housing solution. Recovery begins on the first day of response. But these things have to be pre-positioned, and you have to advocate for them and tell FEMA, no, not a hammer. We got some other tools we need to bring here. And here is the analysis we've done. We found providers that can provide this to us in a time frame if we are to exit. We've actually, you can go ahead and you can do a request for qualifications in advance. So you have identified modular home providers and say, look, we have the capacity. This is what we want to do. We don't want 100 trailers. We want 75 modular homes and 25 trailers, right? And we're going to put people who say that they would like to use these modules as the basis for their new home in these as a first priority, or we'll find other people later who may take them, right? And so those are the types of things that, but you all have to drive it. You have to get with your state emergency managers, you have to get with your local leaders and work this stuff out. It's possible. There are actually people in FEMA who desperately want FEMA to change and do something like this. And so you will find those people will be happy when someone presents the data to FEMA saying that this is a possible thing.
So, and with that, one item, and it's the local. I think that the solution is not going to be at a national level. I don't think the solution is going to be even at the state level. It's the ingenuity of locals, and I'm seeing some good work out in Spokane. Right now the name is the Elk Shelter System. It is something that community partners within that community, they said, hey, we need to find these temporary houses so people can stay on their property and rebuild and be part of it. So they bought a bunch of, with the state funding assistance, we bought a bunch of 20-foot or 40-foot containers, and they're retrofitting them on site or up on site with local personnel. And so I think that's an option going forward, and they're building plans at it, and we're going to try to push this out as an option. Comes in a lot cheaper than a lot of the systems, and it's locally built, so it's also an opportunity to put people who are disaster survivors maybe back at work. So they can help build the structure they live in, their neighbors lives in. And so there is a lot of it's unskilled labor. So we have a plumber comes in and checks the plumbing before the walls are closed up, same with electrical, but a lot of the work can be done by the individuals, either volunteers, there's a lot of volunteers process, or the survivors themselves with maybe some funding to help put them back to work as well. So those are some of the systems we're looking at. I think that's an idea, and that's again just one option, but look within your communities, what options within your environment might work for you guys, and what or can you get like partnerships and kind of look at those different plans. And that's, I think, locally is going to be those different ideas and sharing across like organizations. Hey, we have this idea, or I saw this someplace. Those little things at the local level are probably going to be a big solution for this nationally.
Thank you.
Yeah, and I'll also add, you know, I know Joel thinks about Cascadia Subduction Zone all the time, and I think about Cascadia Subduction Zone all the time, and at the headquarters level, FEMA thinks about the CSZ, the Wasatch Fault, and the New Madrid Fault pretty much all the time. I was in Boston a few weeks ago, and that was one of the main topics of conversation is how do we respond to that. And I will just say that as much as we think we know about the sort of available assistance and authorities that we have to do disaster recovery now, I do not expect that we'll be operating under the same set of authorities if there's a truly catastrophic earthquake. And so I would, just like Joel said, encourage everyone to think flexibly, right? We know that super dense areas are not going to be amenable to the same solutions as out in Elk, right? That we're not going to be able to just put, if you have a condo building with 400 units in it, you can't put 400 TT, you know, retrofitted trailers on that same site to house the survivors there. And we expect widespread displacement, and we're going to have to come up with novel solutions at that time. And with those, we think the government will produce novel authorities. So at the risk of my job here and speaking kind of too far ahead, I would just say that as much planning as we do ahead of time, I would also expect that to a large extent we're going to have to cross these bridges when we come to them.
I think that's something we saw even in Florida. I know different geographic area, but when they had the collapse of the apartment building, it was something very similar with a lot of displaced individuals in a large city, in a very concentrated area, and FEMA was right on the ground assisting with that as well. One of the unique things about looking at the Stafford Act is we talk a lot about natural disasters, but if you actually read the declaration criteria, it's exceeding the state's capacity and capability. So it can be, when it comes to these presidential declarations, it doesn't necessarily just have to be a natural disaster.
So I'll qualify that. So emergency declarations don't have to be for a natural disaster. Major disasters do have to be natural, except for fires, floods, and explosions, which can be from any cause.
So that's why FEMA was involved in something that was a little bit different.
Yeah.
So with that being said, what questions do we have around just this initial response, or I'm sorry, recovery phase? And for our Zoom members, are there any questions? Anyone that would like to raise their hand and ask a question on Zoom? Or in the room?
I have a question. Part of the discussion yesterday was talking about different funding streams, and this may be a question that comes up later, but I'm curious, is there different funding opportunities available for public housing versus tax credit housing, which often has different buckets of funding? And my housing, we don't have any public housing, so just a tax credit shop. So trying to make sure that
So looking at the different funding opportunities for publicly available funding versus tax credit funding when it comes to the PHA realm.
Yeah, that's a good question, and we run across that relatively frequently at the agency. The public assistance program reimburses the partial cost of restoring publicly owned infrastructure. So where there's a housing authority that is in partnership with a private developer to provide financing or to provide revenue stream via housed individuals or families, that building is still owned by a private for-profit entity generally and is not available, or not eligible for public assistance. The individuals in that building, if there's an individual assistance declaration, would be eligible for the same set of benefits in terms of rental assistance, other housing assistance, other needs assistance, right? The suite of FEMA benefits for individuals, but the developer for that building is responsible for the building itself.
even if it's defined as a public works in the state?
Yeah, so the infrastructure has to be owned by
by a public entity in order to be eligible for public
responsibility.
assistance. Yeah, the legal responsibility would have to reside with the housing authority or with some other entity or organ of the state or local jurisdiction.
So I actually want to pause for a minute when we're talking about funding is to turn to insurance in the recovery realm. So, can't see Ken.
Can I mention something relative to
Yeah.
what Ed was saying earlier? He mentioned that the state of California hadn't given priority beyond that special allocation of tax credits. It's vitally important that you all work with your state agencies, state housing finance agencies, to make sure that there are priority points given for disaster areas until the disaster has recovered from a housing perspective. Be at all the QAP public meetings, talk to board members who have to approve what the staff are presenting as a QAP to make sure that your areas are priorities and that public housing residents are prioritized. For any of you all who have done development using tax credits, it's just a points game, right? And so, and the points, there's a lot of leeway in how and where they set their priorities, and so you just got to advocate for yourselves and get with those agencies and stay connected.
Thank you. So Kenton, can you just give us a little bit of insight when it comes to how long insurance could take? What does that recovery process look like? We talked yesterday about sometimes they just show up and start cutting checks. But that's not the long game. That's not through the being able to close out what their final costs are looking like. What does that look like?
Well, it can look frustratingly long, I think, in some circumstances. And again, I'll remind everyone of the caveat, in case you missed it yesterday, that our association and the part of the industry that I work in is the admitted market, and a lot of the products that are, as near as I can tell, the products that are available for PHAs are largely in the specialty lines or surplus lines marketplace, which is a non-admitted, less regulated insurers than in the admitted market. So what I'm used to seeing is after a large-scale disaster, insurance companies arrive with RVs and tables and tents and water bottles, and they write checks on a large scale to homeowners in an affected area or property owners in an affected area. Oftentimes they set up shop in a Home Depot parking lot so people can start going in and getting materials that they might need to start doing some temporary repairs while they, reach out to contractors. In the specialty lines market, I have not been able to find much information. Here's the thing about the specialty lines market. There are associations of surplus lines carriers, but they don't exist to do what we do in the admitted market. They're not really here to provide a lot of publicly available information about how their product line works, because the surplus lines carriers are not necessarily located in the United States. Their policies are sold through wholesalers and brokers. It's just a different market. So I don't want to pretend I know exactly how that surplus lines insurance product claims process works, but as I think I stated pretty well a few times yesterday, the key element for those entities that are insured through the surplus lines marketplace, the key is to have a good relationship with your broker or wholesaler or agent that you're working with to obtain insurance, and to ask questions about that claims process before you have a disaster occur. And whether that's wildfire or earthquake or a large-scale storm that does damage to your building, or even if it's not a large-scale disaster, you've just suffered a loss. Your first call needs to be to that insurance, outreach needs to be to that insurance broker so that they can get that claims process started. I can tell you that in the case of the Oregon wildfires, which is one of the largest scale, Northwest scale disasters that we've seen in 2020, even 2 or even 3 years later, some of those claims were not yet completely settled in the admitted market from carriers that you know and see on TV all the time advertising. And the reason for that isn't necessarily an insurer dragging his feet or having some problem. It is oftentimes the permitting process for rebuilding can be lengthy and difficult. The debris removal process can take longer than expected. Finding materials, finding contractors after a large-scale disaster. Every contractor is busy. They're super busy, and all those. And of course, when that happens, that also escalates costs. But the delays in getting construction started, especially if there's a design element or you had building code changes that have to be incorporated, those things can all take a long time. So, you know, you kind of need to pack your patience. But also, as I said yesterday, the more you are planning ahead for what could happen, and the more information you have retained, particularly digitally, so that you don't have to search through a pile of rubble to find your insurance paperwork and your inventory of what was in a structure. All that information, it's so critically important to have as much of it saved as possible, so that if you have that moment when you are having to go through that claims process, you can provide as much upfront. Now, one thing I did find out in doing a little research last night and this morning is that although surplus lines insurers are not as regulated as admitted lines carriers, they are regulated typically by Unfair Claims Settlement Practices Act. So in Washington, we have the Insurance Fair Conduct Act, which regulates or can result in not only the initial claim being paid, but also treble damages and attorney's fees and all that. So insurers are cautious to violate any claims procedures that are required under the Unfair Claims Settlement Practices Act, because that can lead to a lawsuit that can be very costly for them.
And what was that act for Washington?
So there's
that
two.
they can
There's the Unfair Claims Settlement Practices Act, which is a regulatory enforcement by the Office of the Insurance Commissioner. And then if an insurer violates the provisions of unfair claims settlement practices, then they can be subject to a lawsuit under the Insurance Fair Conduct Act, or IFCA, in Washington State.
Okay. So actually, something that just came to mind that I think is really is very relevant right now, and it's something that is unique when we're talking again about this blend funding and different funding sources coming in, is sometimes you have insurance carriers that you've gone back and forth with, you may even get to litigation, and they give you a lump sum settlement. Well, if you're also eligible under the FEMA PA program and your facility was impacted, we talked a little bit high level about duplication of benefits. But one of the things that working with Trevor's team specific in the Pacific Northwest you're going to have to be able to do is identify what other funding streams you've received and what's applicable to the damages. So I want to turn this over to Trevor. He's probably like, Brittany, you had to open Pandora's box. But it's true. It's something that you can be thinking about now when you're even navigating that litigation and those potential settlements.
Yeah. So the Stafford Act sort of directly says essentially that FEMA is the funding stream of last resort for damages for both individuals and public infrastructure. We'll reduce any award we make. This is changing on the individuals. I'll preface this a little. There's a new package of regulations for individual assistance that went into effect in March 32nd. It's out for public comment now. That changes a little bit how we treat insurance for individuals. It doesn't allow us to duplicate a benefit. That is, you still cannot get paid for the same thing twice, but it does provide a little bit more generous treatment for individuals whose damage exceeds the limits of their policy by allowing us to tack on our assistance at the end rather than just considering the first dollar of duplication. So that's a little bit more promising on the individual assistance side. But generally speaking, we can't duplicate a benefit. So if you have a policy that has a line item for debris removal, and we conduct private property debris removal in a jurisdiction, or we conduct debris removal as part of the cleanup of a piece of public infrastructure, we'll reduce the award that FEMA makes for that activity by the amount of the insurance settlement. And that sounds simple, but it can get pretty contentious, right? Because we're actually required to go line by line, and this is ultimately, I think, a benefit to our applicants and to individuals, but we'll go through and see what that insurance settlement is written for, not just generally, but specifically, right? It's written for some drywall, it's written for business continuity, it's written for And where those things that the insurance settlement is paying out for are not FEMA eligible, we won't take a reduction for those things. So like, we're not going to reduce your cost to replace infrastructure by the amount that you might get paid for BizCon. So we do try and be, you know, I think we try and take the most advantageous like construence of that requirement not to duplicate benefits, but it's very real. It's explicit in the Stafford Act, and it can seem like a real hassle to work through as you get sort of more detailed with claim settlement.
And I think when we talk about wildfires and earthquakes, you can lose everything, right? So when you're looking at these insurance claims, there's a large possibility of just having settlements where they're saying, how much is it going to cost to make you go away, right? So it's reasonable they can afford, and so they might give you a $5 million, here it is, if you're happy with this, covers your losses, please walk away. But you also might have a project or have additional funding opportunities with FEMA, and so if it is a $3 million facility, but out of that $5 million, really being able to articulate that only 1.2 million maybe of it was really applicable to the damages of that facility is going to be very important. So while at the moment you're dealing with all of these stakeholders and you're already frustrated and you know no matter what you're coming out at a loss at this point, and I'm sure Ed has thoughts on this, but it's being able to say, you want to say yes to this $5 million, it's still not going to make you whole, but you know it's the best with what you're getting for insurance, but being able to think through on a blue sky day, but even after that response, having that knowledge to be able to say, okay, yes, I'm going to take this, but I need from you, insurance company, a breakdown of how you're coming up to this amount. Because if you do not have that, it's going to be a lot more back and forth administrative burden now working with FEMA to be able to articulate what is actually applicable to the FEMA side of the potential funding. So Ed, do you have any thoughts there?
Just a couple side notes here on insurance by way of color. What Ken said earlier, you see things in disasters you would never imagine you would see. One of the things that just stunned me was the insurance industry the day after the disaster. They showed up in RVs, Allstate, State Farm, farmers, and they were handing out money like candy. It was, and for low-income residents of Butte County, it was like manna falling from heaven. Now, ironically, that was just the first tranche. If you could show you had a policy, they'd just give you a $5,000 check. Boom, no questions asked. And then they'd come back and do an assessment of the property, and they'd fill out and complete the claim, blah, 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 blah. It would be credited against anything FEMA might bring to the table, all that. But, so you have the fairy godmother show up the day after, handing out wads of cash. Amazing. Didn't find out till a year or two later that money was taxable.
Oh, no.
You've got a whole lot of low-income people that just went and had a party. They spent all the money, but it's taxable. So our congressman right now is working on legislation where insurance proceeds from disaster-related events are not taxable. Important piece. And then the second piece, as it played out, lots of insurance companies, you know, they went through the process of resolving claims. We've seen the exodus from our market of many insurance companies, wholesale leaving the state or leaving certain parts of the state. We now cannot secure insurance, conventional insurance in Paradise anymore. And there were a whole lot of insurance companies that held policies up in Paradise that went bust. They couldn't satisfy the claims, and so they went belly up. And so you have to be careful where you're buying insurance. All of this, of course, doesn't really relate to the big picture, big organization stuff, but this is stuff that people on the ground are dealing with in the midst of all the chaos.
That's a great point. Can we talk a little bit about obtain and maintain of insurance? I think that's something that plays a big part into recovery. We're hearing a lot of that it's hard to reinsure. If any federal funding touches any of your projects in the recovery process, they do require that obtain and maintain of insurance. And I'm interested between Kenton and Trevor and Ed, in your experience, what does that look like? What should we be thinking about? And what are some lessons learned there? Especially since you have a requirement that you may not be able to fulfill.
Yeah, so you'll hear me say that the Stafford Act requires us to do things a lot because that's what we implement. One of those things is it requires us to require recipients of FEMA funding to obtain and maintain insurance against a damaging peril for an amount equivalent to the amount that the FEMA assistance they provided, right? So if we provide $1 million worth of assistance, to restore flood damages to a building, we would want a policyholder to carry $1 million worth of, maybe flood's a bad example because of the NFIP, but right, generally speaking, we want insurance against the peril in the amount of the assistance that we provided. And the way we sort of implement that is through two means. One is, as part of the project closeout for public assistance, we require a certificate that shows that you've met the condition. And two is that if that facility is damaged again by the same thing, we will reduce the subsequent assistance by the amount of the previous assistance, for which you ought to have had insurance, by the amount of the obtain and maintain requirement. Now, the big caveat there is that FEMA cannot require an applicant for public assistance to obtain and maintain insurance that is either that the state insurance commissioner says is either like unavailable or sort of too expensive. And FEMA has to agree with that, but there's not a lot of like wiggle room there. There's no real mechanism for FEMA to evaluate that and say, no, we don't agree with the state insurance commissioner. I've seen that done in a lot of ways. In Alaska, after the Cook Inlet earthquake, when we evaluated obtain and maintain requirements for public assistance applicants, the state insurance commissioner just said, hey, right, like an organization spending this much of its budget on a rider for earthquake insurance is not reasonable. This policy, they can only get like this some amount of coverage, or they can't secure coverage in a cost-effective fashion at all. I know my colleague down in Region 6 in Texas has to deal with applicants that get like parametric policies or portfolio policies where for an individual building, it appears that each individual building's obtained and maintained has been met, but on the portfolio is more difficult to evaluate. But yeah, sort of as we look at the insurance market, that's one of the things that FEMA is concerned about too. We've implemented the National Flood Insurance Program for a long time with mixed success, I would say, but we're seeing wholesale flight of major lines or major carriers from markets like coastal Florida, coastal Texas, Louisiana for flood, and then Northern California, some parts. That's the market I'm most aware of it for all perils, because fire is part of the required package for insurance there. So, yeah, the upshot there to bring it back home is, as you sort of work through the public assistance process with FEMA after a disaster, work with your state insurance commissioner to determine what types of this insurance are available, and make sure you're looking for that statement from them about its affordability and availability.
No, so we've definitely heard another stakeholder to add to the list, just to be able to be aware of if you have a relationship or you know what that looks like for your state, or who you can go through if you want to identify a point person for that.
Brittany, I have just a little something to add. I know you can't see me over here hiding behind the podium.
Sorry.
I just want to point out that there are some really important differences between what's happening in California and what's happening elsewhere. I mean, Florida is a unique situation as well, but staying on the West Coast. I mean, California has a lot of regulatory infrastructure that Washington, Oregon, and Idaho do not have, Prop 103, and what's allowable for insurers to engage in terms of both risk mapping, risk identification, risk assessment, as well as rating of policies and creation of policy forms and changes and that sort of thing. We do have a rigorous regulatory and enforcement mechanism in Washington and Oregon in particular, but there is freedom among carriers, particularly in the specialty lines market, to set rates as they need to. As a result of that, I think even though the market, as you well know, is super challenging, it's not as dire as it is in parts of California and Florida and Texas. And we don't have the same degree of peril here, not only because we don't have hurricanes, as an example, but, or at least haven't yet. California had one, right? So maybe they're coming. But we also we don't have the population level. Nothing is as big and can be as devastating as what you can see in a place like California or or Texas or Florida. So those things are important to remember in terms of your market availability. I mentioned yesterday and wanted to throw out again that there is about to start a study from the Washington Office of the Insurance Commissioner to determine really more about a market we don't know that much about, like the availability and affordability of coverage and how hard is it to actually find insurance coverage for public housing authority related projects. So I think we'll know a lot more about this, a year from now than we do now. I think it's a 2-year study, so the legislative recommendations wouldn't come until the end of next year. But it's going to be interesting to finally learn more about what this market looks like and how hard it actually might be to be finding coverage and at an affordable price.
So our understanding of fires and insurance risk is an evolving subject. And I say that because we had a wildfire that wiped out, acreage-wise, I think 300, 400,000 acres in the Camp Fire disaster. Fine, it burned off 100 years of overburden and cleared the deck, so to speak. The next year we had the Bear Fires, and the following year the Dixie Fire. The Dixie Fire is the largest fire in the history of California. Interestingly, when the Dixie Fire came up with the old burn scar from the Camp Fire, it stopped dead in its tracks. There was no fuel. So obviously the risk profile had changed for the area that had already burned. How long does that risk profile change? How do you measure that risk profile? It's not a matter of being in a wildfire zone. It's a matter of being in a wildfire zone at what stage of its evolution, at what state of its existence.
Right.
And our insurance markets don't really measure that now. It's an on-off switch. It's not a...
They're getting there,
Yeah, exactly.
but you're right. That science is evolving, and the vendors that do that risk mapping are also evolving and having to figure that out because, yeah, that's exactly right. They need to understand and be more responsive to what's actually happening on the ground in a location when they're determining underwriting and rating policies for that area.
All right. Well, with that, we'll go ahead and take our break for 15 minutes.